Hi, it's Steve and Joe. And Steve, we're in a slightly different location today, a little bit windswept, but on higher ground because our office flooded overnight.
Yeah, look, reports of Australia being extremely dry and suffering with tremendous drought may be a bit premature. We've been completely flooded in the office, so we've moved to higher ground. Here's some views of what our office looked like earlier this morning. So that's why we're here. We're on our balcony at home with a lovely pot plant display behind us,
and a bit of wind.
And a bit of wind and good views of Melbourne, which you can't see. So a weekly take. Let's start with commodity milk values. I thought it was just interesting to bring us into perspective with where we are. This is the Australian milk value, which we keep track of each week based on spot quotes out of the Oceania region.
And the industry product mix, and it's at a 32-week low, just over $5 a kilogram milk solids.
It's got to be worrying for the ability to uphold, or certainly won't. It doesn't look like there'll be any increases in milk prices this year from this.
No.
So the milk value's tumbled to close to $5. You can see why. Lower cheese returns, lower skim, particularly butterfat prices haven't fallen the hardest. The Australian dollar's done its best to hold that up. It's fallen against the US, so that's a worrying outlook. We're not the only region with this problem. If we look at what's happened in Europe, there's been a decline there of late too, and putting milk prices against that, these are averages paid by major companies in the big three producers. Those prices haven't started to tumble yet, but they will.
Yeah, given the relationship with those skim and butter returns, they'll be under pressure in the next couple of months.
Yeah, and whilst most companies have nominated prices out to the end of the year, we'd expect quarter one next year is when this is going to start to bite, just as those feed shortages start to come home, and we might see milk tighten a lot with lower margins to farmers.
Sure.
So that's one to watch, as we all always are.
Pack it up, pack it in, let me begin.
Going across the ditch, New Zealand weather has been very interesting. This is, what a difference 2 weeks makes.
Yeah,
we
incredible.
look back in the second last week of October, we had a very orange-looking soil moisture map, and this is one from this morning, taking yesterday's into account. So things have greened up quite a lot, and Australia likes to give to New Zealand, and this time we're giving them a lot of rain. So this system, which is currently washing across Australia, is going to keep going right across New Zealand in the next week,
Yeah, sure.
which will keep greening that up.
Absolutely.
Get up, stand up, come on, throw your hands up.
Over to GDT.
Yeah, GDT, we had a 2% decline this week in the GDT event. Not a total surprise given what's happening with availability in New Zealand and on the platform, but it is the 6th consecutive fall. And you have to go all the way back to May, Steve, for the last positive move in GDT. So we just thought we'd reflect on what's kind of happened from those more positive times in the first half of the year, given that we've actually got less milk available in this half.
Yeah.
So the EU drought, probably the expectation was that it was going to be worse than it's turned out to be. Butter prices have gone through a fairly significant correction. We've had New Zealand get off to an absolute ripper start in their season, and obviously overlaying all that, over that period, this kind of trade war tit-for-tat thing has really escalated, and that's meant things are fairly uncertain on the demand side.
Yes. So that's also, that brings us on to some other changes in returns and milk use, which are interesting with what's going on in the world.
I came to get down, so get out your seat and jump around.
Yeah, so this is my chart of the week, which is looking at the US product mix and what's happening. We estimate that so far this year there's about 2% more manufacturing milk available, but you can see that it's definitely been cheese that's been favoured by US manufacturers at the expense of non-fat dry milk. But yet we've seen exports fairly strong. So what's going on there, Steve?
So look, I pulled out this chart on the right, which is just the changes over the last year of the use of non-fat dried, or skim milk powder as we call it, in the US mix. So production's down, consumption domestically has fallen hard again,
Heaps,
down
yeah.
17%, while exports are stronger. and they've lightened their stocks, which we're all pleased to see. So digging into that use, this is a really interesting picture showing that this is the third year in a row where the use of skim in the US industry has fallen, despite values being pretty low.
Sure.
So prices are pretty cheap, as we know, because of the European situation. The take on this is that simply the use of skim solids in the US industry has changed. It's being used less in cheese manufacture and probably in other products, and the strength of exports is a bit away from domestic use.
So very sensitive to price, those domestic end users in the US.
That's it.
And they're making other choices.
And you can see the export growth here. The US has certainly taken share away because the total market is growing in small percentages, but the US has exported 26% more skim milk powder this year than last year to date, which is fairly important for their industry's balance. Another little story while we're talking exports, just shifting across to what's happened to whey exports with their numbers out this week. You can see that big trend. That's obviously due to the imposition of tariffs in China, which has really slowed down their whey export growth and probably will help rebalance that market internally in that industry. So pretty interesting changes around the world. Which brings us to the end of this week's little grab. Thanks for watching. We hope to be back in a normal venue next week, but it's goodbye from us.
Jump around.